In this video, we'll be discussing how Ethereum is poised to make a move, possibly all the way to 3,500. We'll also be talking about downside targets if things go horribly wrong. So stay tuned.
Hey guys, Krisha here. Please be cautious of any fake comments and emails you may receive from people pretending to be MANCO research. Sean and I will never, ever contact you for investment opportunities or anything of that sort. To get in touch with the real MANCO team, make sure to join our official Discord chat using the link in the description below. Stay safe out there, and remember, do it MANCO.
Good morning, guys. My name is Sean Dexter, and I welcome you back to the MANCO Grove for a daily analysis video. In this video, we'll be covering Ethereum. Yes, you heard me right, ETH on the USD pairing. It's been a while since we covered Ethereum. We were covering it pretty much every day when we were in that trade, right? For those of you who have been following MANCO for a while, you guys followed us through that trade where we entered around $290 to $310 average and saw the signs and pretty much got out at the price we're currently sitting at, right? Around 1860-ish was our average exit. And the reason we got out was because we were seeing some bearish signs on the ETH Bitcoin pairing that we weren't liking, right? Which is why I pretty much exited my trade, even though I was so ultra bullish on Ethereum, calling for those big numbers on the USD pairing. And regardless of that, right, none of that has changed. On the USD pairing, Ethereum still looks really good, but at the time it just looked like, hey, it might be better off being in Bitcoin for the interim. Now, however, things are beginning to perhaps change around, right? Ethereum is definitely looking spectacular on the USD pairing, so we'll be covering that today. And in the last video that Krisha and I did together, I did talk about a couple of things I'm noticing on the ETH Bitcoin pairing as well. That's getting interesting. So with that, let's go ahead and get started. We're going to be starting off with the dashboard as usual, and then moving on over to the weekly time frame and then the mid time frame. So I will cover the daily and the 2-day, perhaps just the 2-day time frame. Again, those of you who know or who have been following MANCO for a while know that I'm a big fan of the 2-day time frame on Ethereum. So here we are on the dashboard, and I want to start with the daily to show you guys that, hey, we're still neutral. Oh, let me switch to Ethereum. Actually, I'm looking at Bitcoin over here. Ethereum, we're still neutral, right? We are neutral on the USD pairing as well as on the Bitcoin pairing. However, much like Bitcoin a couple of days ago, Ethereum on the USD pairing on the 4-hour time frame has switched long. In fact, on the Bitcoin pairing, it has switched long too a day ago. We're up around 3%. Hence, so this is what you're looking for, right? Just like we discussed again in the previous video, you want the trend to start cascading from the lower time frames onto the mid time frames and then on over to the higher time frames. What were the 12-hour time frame? What do you know? ETHUSD has flipped long on the 12-hour time frame, and this was 14 hours ago. So things are looking good. Again though, let's check the daily. We're still neutral on the daily. What about the 2-day? Still neutral on the 2-day as well, right? So Ethereum is in consolidation on those mid time frames, and that's really important to keep in mind because it allows you to position yourself appropriately. Get ready mentally and get ready with your entry, with your positioning, etc. So let's go ahead and switch on over to the charts now. We're going to start on with the weekly time frame and then move on over to the mid time frames to see what's going on over there. Here we have Ethereum on the weekly time frame, and right off the bat, right, what does this look like to you guys? It looks freaking spectacular to me, guys. If I was looking only at this and not looking at the Bitcoin pairing, right, if I was trading against USD, for example, and I did not care about collecting Bitcoin as much, this would be like an extremely good looking chart to me, right? We're seeing your typical, this is almost the ideal bull flag formation that you want to see on the higher time frames. You have a massive pole over here and you have your freaking flag right over there, right? You're seeing Ethereum squeeze, and we're seeing it squeeze on the freaking higher time frames. But again, we want to see confirmation because a squeeze, guys, could break to either direction. It could break towards the upside, but it could break towards the downside. Now over here at MANCO, we are trend traders, so when we see a formation like this, a consolidation where it's squeezing, where it has a probability of breaking either to the upside or towards the downside, we lean towards the upside, right? But again, you have to always keep in mind that it could break towards the downside and you got to be ready. So either play the breakout trend right? Or you play the consolidation and have your risk management in place to get ready to get out if it breaks towards the downside. Okay, so here the weekly is looking good. All of these horizontals, by the way, guys, are the same horizontals that we had plotted a while ago when we were in the trade, when we were taking the trade, all the way from this zone over here all the way towards the upside. Nothing has changed. So Ethereum has pretty much been opportunity cost, right, this entire time. That's consolidated and gone sideways, while Bitcoin during this period has gone up, right? Yes, it has gone up in a very like choppy or like really choppy trend manner, but it did go up. So our decision to actually be in Bitcoin during that period was really beneficial, to say the least. Now, however, we may want to be keeping an eye on Ethereum because there might be opportunity over here yet again, right? So again, the horizontals, nothing has changed thus far. The key horizontal towards the upside, guys, is going to be around $1,962. The key high over here is around 2050-ish, right? We're an all-time high territory here, and we're putting in a bullish consolidation right above the all-time weekly high, the previous all-time high closes, right? So really good picture over here, but you want to see that continuation moving forward. Let's clear all the horizontals over here, turn on the Mango dynamic, see what's going on. And again, the Mango dynamic nailing it the entire way, made that trade super easy the entire way. Again, gave you that really good buy, an instant bounce back opportunity. This trade alone was really good. What was that? A good 50% move towards the upside. Now we're squeezing, right? Again, we talked about that, getting accumulated on the op line, on the blue dots right over here that you guys can see. Again, I wouldn't be bearish on Ethereum on the USD pairing until we actually start breaking the structure down. So I want to see, first big red flag would be us losing the op line. We haven't lost it ever since this zone over here, guys. Ever since we broke out of this consolidation, right? This was all the way back in freaking October. Since October, we've been holding it. So the first big flag, and that would just be a red flag. That wouldn't even be like, okay, it's bearish. It's only when we break this zone over here between 1400 and 1250 is when I actually say, hey, you know what, this is actually looking really bad, and I'd be bearish on Ethereum. Until then, you cannot be bearish on Ethereum, right? You could be bearish on Ethereum against Bitcoin. Essentially, you're saying that I think Bitcoin is going to outperform Ethereum. Ethereum is going to go down. But being bearish on Ethereum in general, on the USD pairing, I think that's, you can't, no, the charts aren't indicating that at all. Alright, so let's zoom in over here now and talk about what we could expect Ethereum to do towards the upside or towards the downside, depending on what direction it breaks. I am leaning towards it breaking towards the upside, of course. It's a bull trend, it's a bull market. Ethereum's looking bullish over here. Now, our initial target, right, again, all our targets from our previous videos are still intact, all right? In fact, we did hit our initial target of 2050. Surprisingly, we hit it to the freaking T, right? What was the high over here? It says 2041. So yeah, we missed it by around $9. In fact, $8.20. Sorry, 60 cents. But the targets after that were, I believe, 2,500-ish, and then 3,000-ish, and then after that 3,500-ish, right? Again, just $500 increments, keeping it really simple, but they do line up with other things too. You could get more precise with it, and we will get more precise with it when we do get the break. For now, you guys just need to keep in mind the general direction of, or general price area of what Ethereum could get, right, or get to. That way you know your reward to your risk ratio. Okay, so we can go ahead and actually even do a measured move of this towards the downside. Let's go ahead and discuss the downside first. Ooh, it's actually lining up perfectly with the box over here. If we do break the zone, right? If we do break the zone over here, lining up perfectly with this box. But towards the upside, what's this lining up to? Actually, $2,500. What do you know? The charts, wow, the charts actually are so beautiful in its symmetry. In fact, you know what we could actually do? We could also have a more bullish target, which I think is perfectly legit to do with a structure like this, right? If you go ahead and let me hide the chart's getting messy. Let me hide the indicator for now. So essentially what I'm doing, guys, is I'm measuring the pole with the flag, and we're going to be taking our target on the breakout, and that's going to be around 3,497. So essentially, that's actually $3,500 pretty much on the dot, guys. That's ridiculous. It is crazy how symmetric Ethereum is with its freaking targets. It's really good. So the chart is looking good. If we do get the break, however, is when we actually look for those targets. Until then, we are still in consolidation. Remember, the dashboard saying it too. The daily, the 2-day are both in consolidation. Yes, the 4-hour has switched around. Yes, the 12-hour switched around. But now we want to see that daily as well as the 2-day switch around as well. So with that, let's go ahead and look at the 2-day and the daily. There's not going to be too much of a difference because we are in a squeeze formation. We'll go ahead and hide everything over here. And again, so what are you guys seeing over here, right? If you guys have been watching the Mango videos for a while, you guys should have picked up a thing or two based on just trend watching, right? And right over here, we're seeing a typical high. Oops, where did I go? There you go. High, lower high, higher low, higher low, right? So what's happening? What's happening over here? You're seeing the bulls step in at higher prices, willing to buy higher, and you're seeing the bears step in at lower and lower prices, right? So they're willing to sell at lower prices. That's how you get your squeeze. That's how you get the market in a decision phase where, hey, who's going to win this? So over here, because you have the bears selling at low and lower prices, right? They're willing to sell quicker, but we also have the bulls stepping up and willing to buy quicker. They're not waiting for lower prices. They're not waiting for price to come all the way down to around 1300. They're at this swing low over here, they're willing to buy at 1500, right? So we have the bears stepping in, we have the bulls stepping in as well from both directions. You get your squeeze, and then there's going to be a break in one direction or the other, and then one of the sides, okay, either the bulls or the bears are going to have to cover their positions, either take their losses, etc. So, for example, let's say the bulls win this battle out and the bears have to cover their positions. What do I mean by that? Essentially, guys, when you are taking a short position in the market on Ethereum, for example, you are borrowing Ethereum from the exchange and then selling it into the market. It's not your Ethereum, okay? It's not your Ethereum. You're borrowing and then selling it. But let's say I borrow at a price of around 1900, and then price starts going higher and higher to 2200, 2500. I'm feeling the pressure. I'm like, damn, I borrowed it at 1900. I need to pay that Ethereum back. If it goes higher, I owe Ethereum at a higher price, right? I'm going to have to buy it at a higher price. So the shorts feel the pressure, and then eventually they cave in, cover their positions, take their losses by buying Ethereum back at a higher price, right? So now the sellers, the short sellers, become buyers. That's why you see breaks have that volatile move, guys, because not only do you see the buyers push the price up, but you also see the bears having to be buyers as well. And the same goes on the reverse, all right? The same goes on the reverse. If you see the break towards the downside, the buyers are going to need to cover. Okay, so cool. So where do we see that confirmation? Well, here's the thing about this structure over here, guys. Let me just go ahead and clear out all of this. This lower high over here, right? It is actually more bearish than it is it is actually more bullish than it is bearish, regardless of whether it's a lower high, because the bears actually let it come pretty high over here, right? It got closer to this level than you would usually see. So the angle, the slope between this high and this high over here is not that much. You could literally make an argument for this being more of a ascending triangle, and that would be completely valid, because we almost pretty much touched the horizontal close right over here, right? We almost pretty much touched it. In that case, all we have is an ascending bullish structure, okay? So we have two ways to look at this. You could either look at this diagonally and be like, hey, that's a lower high, or you could look at it as a horizontal over here. The safer way is to look at it as a horizontal, but you could take it one step further, right? And the safe way is the horizontal. The more aggressive way is the symmetrical triangle. But you could do both. You could take your first position. Let's say you are, okay, this is not financial advice, okay? I'm not a financial advisor. I don't know what I'm talking about. You're just going to lose money if you listen to me, all right? So do not listen to me. I'm just talking nonsense over here. But what I like to do is, first position on this break over here, you usually get the break, the retest, and then the second position when we get the second half of the position, right? The first entry is what I meant. Sorry, apologies. First entry, right? When you get this break over here, and then the confirmation is when you actually break 1976 right over here, and then you have your full trade on, right? You average between those two breaks, those two confirmations. So there are two parts to this trade. So you're playing both the symmetrical and the ascending triangle, and it works the other way around too. If we do break towards the downside, you could play the diagonal along with the horizontal over here. But in this situation, I'm the kind of trader, this is just my personality. I'd rather play only the horizontal to get the confirmation of the break towards the downside. If we do break this, right, this zone over here around 1400 to 1395-ish, I'd rather mark out this entire zone, guys, by the way, not just the flat line. Right, so this zone over here, if we do break the zone over here, it's not going to be the best picture at all, and I'm pretty sure the markets in general are going to have a bad look at that point. Like Bitcoin's probably breaking down too if you're seeing Ethereum do that. So essentially we're going to have this structure, right? What does that look like to you? What does that look like to you guys? A head and shoulders top, right? A head and shoulders. You have a left shoulder. Yes, the shoulder was higher than the head, and then you have a right shoulder. But again, remember, the psychology of what is happening over here matters. You're going to get a lot of pattern traders saying, "Hey, Sean, no, that's wrong. The head needs to be higher than the shoulders." And no, that's not true, guys, because you have to understand what the meaning behind the pattern really is. And it's essentially the meaning behind the pattern is that the bulls are trying to push up the price and they are failing to do so. And on the first attempt, the second attempt, and the third attempt, finally they give up and they get out of their trades, right? And think about it through a psychological perspective too. If you were a trend trader all the way from down over here and you were adding through this consolidation, you'd get impatient at one point, expecting the break towards the upside, right? Eventually at one point you're like, you know what, I'm just getting out of this. This is taking too long. Because a lot of traders, they also have a time component to their trade. Once it starts taking too long, they're out. What happens when even the buyers start exiting? They become sellers, and the sellers also step in and sell even more, right? Adding more downward pressure. Again, guys, it works both ways, right? Both ways. Okay, so that's the theme on the 2-day, and for the daily, it's pretty much the same thing, guys. Nothing much changes. Look at that. In fact, the horizontals, or rather the diagonals, work the same freaking way. Nothing really changes. Okay, so the key thing that you guys are interested in is the upside target. But those of you who are looking to learn, you guys probably picked up a thing or two in the interim of this video. But again, the upside targets over here we're looking at is around 2,500-ish as a first target, and then after 3,000, and eventually my target would be around 3,500 if we do break this. It's going to take its time, okay? And does it outperform Bitcoin in during that time? We don't know. We have to look at the Bitcoin pairing for that, right? We're only focused on the USD pairing for this chart. Perhaps later this week we'll cover the Bitcoin pairing too. Let me know if you guys do want that. Seems like many of you guys aren't too interested in that, which is completely fine. But again, towards the downside, we're looking towards this zone. Towards the upside, 3,500 eventually. My name is Sean Dexter. I hope you guys enjoyed this video. Let me know in the comments down below if you did. If you hated it, let me know either way. Hit that dislike button if you did. But hey, if you did enjoy the video, go ahead and hit that like button. I'll see you guys in the next one. Until then, do it the MANCO way, do it the stress-free way. Ciao.